All right, these are the 3 best investments if you have $100,000 to deploy. So I was talking to a buddy of mine last week who's a very influential, successful, influencer on social media in an industry that's not real estate. So he's got a business and he writes books and does coaching and education. And he said, Tim, I have about $100,000 saved up that I want to invest and I want the highest return possible. What would you advise me to invest in? And so this video is going to be the 3 things that I shared with him that will yield the highest possible return on his $100,000 investment. Let's dive in. All right, so number 1, the best investment every time will always be in yourself. I know it's not the answer you were looking for. I know it's not the answer probably he was looking for. But what I found is when you invest in your own personal development, whether this is coaches or books or conferences or meetups or masterminds, any of those things, when you're investing in your own knowledge, in your own connections, in relationships, those are things, although not as quantifiable as a direct, put out this much, how much am I going to get back? It's not as quantifiable as that. It will always yield the best results and the best return on your investment because you're going to have intellectual capital, relationship capital, and experiential capital that you will be able to take into every single situation, every business circumstance, every negotiation, everything you do for the rest of your life. If you took all the physical stuff away, this is something that you will always maintain, and you'll be able to then regain all that physical stuff again in a fraction of the amount of time because you invested in yourself. You know, the first mastermind I ever plugged into was $30,000 for a year. $30,000 of an investment. In a year that the most I ever made was about I think I made about $120,000, $130,000 that year. So it was a huge chunk of my income to take that and in blind faith invest that into a mastermind group. But because of that mastermind group that I plugged into, I had about 15 or 20 different mentors that helped me with my health, that helped me with my spousal relation, being a better husband, being a better father. It helped me retire my wife from her job within 24 months. It helped me scale my business, gain access to millions of dollars of private money when I had never raised that much private money before. And I learned skill sets and found relationships, joint venture partners, buyers of my turnkey rental properties that I was selling, where I was able to then scale that business to sell over 100 houses in the first year. So is it quantifiable? I can't really say that it's a direct, because I spent $30,000 that I made this much money, but I can say that with that and a little bit more effort and the relationships in the room, I did triple my income over the next 10 months after I joined that mastermind group, and I made about $400,000 by the end of 2015, all because directly related to the knowledge I learned and the relationships I built from being in the room and investing in myself. All right, number 2 is your own business. This is one I think so many entrepreneurs overlook. The thing with investing in your own business is you're going to get a better return on your investment than investing in somebody else's business. Think about it this way. There's always 2 assets in your business. Marketing and people. If you dive into your own company and you look at where you're spending your marketing dollars, you should be able to take that $100,000 and pour a fraction of it into marketing and get a dollar for dollar yield. Not only are you able to then deploy that money and make your money back directly from the amount of sales that happen, but now there's clients, customers in your ecosystem and in your database that are likely to buy again in the future and likely to spend more money with you over time. So investing $100,000 into marketing, getting your $100,000 back almost immediately, and then thinking about the lifetime value of those customers could yield a 3 or 4 or 500% return on your investment. The second one is people. What if you hired an admin for $40,000, $50,000 a year to take a lot of the administrative things off your plate? checking emails, scheduling, all those kinds of things, running random errands. It allows you to focus on prospecting for deals, prospecting for investors, prospecting for suppliers, vendors, things that would refine your operations. And you take a look at your day, most business owners don't spend that much of an 8-hour day, maybe 10% of their time actually doing revenue generating activities because they're busy doing all this administrative stuff. So if you can remove the administrative stuff off your plate and you can double your time on revenue generating activities, how much more money can you generate? Think about hiring a salesperson. Maybe you hire another salesperson with a base salary of $30,000, $40,000, $50,000 a year with commissions and goals and incentives put in place where they can make more money, and they're now driving additional revenue. That 50, let's say you hired both of those roles, an admin and a salesperson, and you spent $100,000, and it's scary because that money's gone at the end of the year. But I'm promising you, I did this in my business. That first year, I hired an admin and I joined a mastermind. And by me being able to have access to the insights, have access to the relationships, and being able to focus on revenue generating activities, again, I tripled my 6-figure income. I'm telling you, the $100,000 is best spent on these things. If you spend it here, you're going to see a 5x, 3x, 10x return in your own personal business instead of a 10% return somewhere else. And so if you are really committed to no longer investing in yourself because you're already spending X number of dollars on that, and you're no longer committed to investing in your own business because you have an allocation for that, and then you have this $100,000 where you're saying, hey, I just want to hide this money from myself. I want to go and park it in a few different investments, let it grow, not have access to it because I have certain allocations over here for these other things. Here's exactly how I would split it up. Number 3 would be a split between real estate and businesses. You've read Rich Dad, Poor Dad. You know that businesses and real estate are the assets that you can buy. They're the physical things that you can buy, that you can invest into, that put money in your pocket instead of taking money out of your pocket. So you're looking at real estate and businesses to deploy this $100,000. So then, taking it a dive deeper, I would look at equity growth. I would look at cash flow / dividends that it pays out, and I would look at tax benefits. So let's say you take 50% of this money and you put it in businesses, 50% of this money and you put it in real estate. When I'm looking at the businesses, traditionally you might want to put some in publicly traded businesses like the stock market, and you might want to take a fraction of it and put it in privately held businesses, private equity, and invest in traditional businesses. But I'm also looking at what is important to me. Am I getting equity growth out of it? Like I have some of my money invested into a prop tech fund that invests in all these different prop tech, like property technology type of businesses. That is all about equity growth. I get no dividends, no cash flow from it. The idea is let these companies grow and either be bought out by private equity or go public, and I get big paydays in the future. But usually the businesses don't provide tax benefits, which is one of the downsides of having businesses in your portfolio, but you do get some of these other things. When I take a look at real estate investments, the real estate could be equity growth. Like in Charleston, South Carolina, where I am right now, there's a ton of equity growth, but there's not a lot of cash flow from the properties here. Can't really make the numbers work. A lot of people are moving here. There's a lot of demand. That demand pushes up values. The rents maybe a little bit will grow, but nothing compared to where I'm originally from, which is in Cleveland, Ohio. Cleveland, Ohio gets a ton of cash flow from our properties, but guess what? Not that much equity growth. It's been pretty stagnant for my entire life. The benefit of both is tax advantages. You get the tax depreciation that offsets a lot of the cash flow that comes from these deals. And if you don't want to go out and buy rental property yourself, you can always invest as a limited partner into a syndication. For our business, for instance, we have private investors that are limited partners in both syndications and in our debt fund. So some in the syndication side of things, it's like I take a property and I might carve up a percentage of the ownership and give it to the limited partners. Those limited partners get the equity growth. They have a preferred return that pays them steady cash flow if the property's performing, right? If it's new construction or if it's a value add, then that preferred return would accrue and then catch up later. So you get the benefit of the equity growth and you get partial benefit of the cash flow and dividends, but you definitely get the benefit of the taxes advantages versus investing in something like a debt fund, right? We have legacy cash flow fund where people can invest and they don't get the tax benefits, they don't get the equity growth, but they have very steady cash flow and dividends. And they're saying essentially, hey, I've got the equity growth, I got the tax benefits from some of the other things that we invest in. I'm looking for a higher than normal return that's predictable and paid out quarterly no matter what, regardless of where the money's deployed. They're always getting a payment every single quarter on their investment. And so we pay somewhere between 10 to 14% in our investment fund that's just predictable and hits on a quarterly basis. So when you are going and taking this $100,000, assuming you've already invested in yourself or allocated a certain amount of money beyond that $100,000 to investing in yourself, and you've allocated a certain amount of money into your own business and scaling your own business through marketing and hiring great people, and now you're looking to invest into other businesses and other opportunities and other assets, these are the things that I'd be looking at. Real estate, business, and I'd be weighing out what's most important to you. Are you looking for equity growth, cash flow and dividends, or tax benefits to then offset earned income and passive income in your traditional business? Maybe you're a little bit closer to retirement and predictable cash flow is more important to you than the equity growth. Or maybe you're newer and you have a lot of timeline to invest, and equity growth is really where you want to make a big push to have some big pops, and because you have time and runway on your side. So depending on your situation, where you are, what you care about, me, for instance, I want tax benefits to offset my earned income, and I want predictable cash flow in my life because I have enough equity growth through my real estate and through my other businesses where I don't really need this anymore. So now I'm really focused on cash flow and I'm really focused on tax benefits. And I'm not nearing retirement. It's just what's important to me right now for simplicity in my life. So there's no right or wrong. It's where are you on your journey and what's going to help you get to your end goal the fastest. So what would you do with $100,000? Leave it in the comments below.